Hi, everyone, and welcome to the VC Corner. The VC Corner is part of the SGI podcast and SourceSox community. The VC Corner is really a series of episodes that will be designed to delve into the often invisible world of venture capital firms, private equity firms, and really getting information from seasoned angel investors, as long as drops of wisdoms along the way. In each episode of the VC Corner, we'll inspect different aspects of these powerful financial institutions, shedding light on their operations, strategies, and influence on the economic landscape. The aim is to really demystify the complex world and dynamics of VC and PE firms, helping both junior and seasoned individuals gain a better understanding of their roles and how it impacts the business world. But that's not all. We'll also be talking to seasoned founders and entrepreneurs, really allowing them to also gain some insights from our deep dives into the mechanics of scaling a startup from scratch, securing funding, and really getting into the nitty-gritty of things, such as providing insights into pitch process, term sheets, negotiations, due diligence, and much, much more. Today, I have the pleasure of being joined by Ernst. Ernst founded TurningPoint Investment, an advisory and investment company. His early career actually started at McKinsey, at which point he actually moved into investment banking, then very quickly becoming a partner at EQT Partners, followed by setting up the operations for CVCapital across Europe. Ernst, I'd be glad for you to introduce yourself.
Yes, thank you, Ori. My name is Ernst. I'm an economist by education, and I then worked into consulting, moved on to investment banking and private equity, and also had to do a lot with the VC world in financing VC companies and founders. And this is also what I'm doing today. Today, I'm an investor, and I occasionally invest in startups, and I help mid-sized entrepreneurs with their financing issues.
Amazing. Thank you very much, Ernst. Amazing. So, Ernst, in terms of yourself, I guess a lot of people are curious how individuals get really into the VC and PE scene. So, I guess the question is, how did you begin your journey into this kind of role?
Yes, I think I would like to start with my studies of economics. I had the luck that I was really interested in the subject I was studying, and it became a kind of a passion for me. And thus I finalized these studies among the top 5%, which then opened all job opportunities for me. That was a big luck. You always need to have some luck also in the final exams. And so I think my biggest success, one of my biggest success was to finalize these studies at that level and so have open doors for many job opportunities. And I chose to go to McKinsey, and which was a fantastic time. I spent there 7 years. And then I moved on into investment banking and private equity. And I was also very lucky, and this was also one of my biggest successes, to enter EQT, which is a fantastic private equity firm, as a partner. Yeah. And of course, at McKinsey, every project was a big success. Otherwise, you are fired, which is fully fine. Yeah. And at EQT, my biggest success was investing in a mid-market company. We made 5.5 times the money in less than 2 years. We really changed everything in the company. Yeah, that was amazing, including the CEO. We built a new plant and then exited to the only existing buyer in the world. This was really a fantastic story. Later on, I founded the European activities of CVCapital, which is a Chinese investment bank, which was also a very exciting journey, to work closely together with Chinese people. And we financed a lot of startups here in Europe, and also sold the one or other European company to China. And there we had a fantastic project of a large mobility startup. We raised 75 million from a European investor, then brought in 50 million from a Chinese investor, and negotiated a joint venture agreement with the Chinese investor, which was really exciting. Yeah, and yeah, I would say these were the highlights. Yeah, I had experienced in my professional career.
Perfect. And in terms of yourself, obviously we kind of went through the stuff that was really successful. You've done pretty well in your career so far. Do you think there was anything that you would have done differently in the past in terms of these journeys so far?
Well, I did not think so much about it, because you cannot change it. Yeah. Yeah. And afterwards, you're always wiser. If I started to think about it, I would probably change the one or other thing, but it is as it is. And so I concentrate on the present. Perfect.
So as next bit we'll be talking about will be essentially looking at what defines, a really exciting or really good startup. So in terms of yourself, the key things that you might be looking for, what would be, I guess, an investable startup for yourself to have a look at?
Well, I think any VC investor looks for a scalable idea, with an adequate market potential. Yeah, everyone, they're looking for unicorns and not to build a mid-sized company. Yeah, so it must be an idea with an appropriate market potential. Yeah, first of all. Then secondly, what all studies have shown about successful startups, the timing must be right. Yeah, right. Timing is a very important element of the success of a startup. You can be too early, you can be too late. Yeah, but nobody really knows what is the right timing. Yeah, yeah, it is extremely difficult to say. Afterwards, you know it. Yeah, but that is extremely difficult. So, and then the third most important element is, of course, the team. And I've seen teams and startups where I thought the idea was questionable for me, for maybe not. But the team was so strong and so committed and had so much energy that I thought, yes, they will make it. And they did. They became unicorns even. It is incredible what difference a fantastic team can make. Yeah. So I think what an investor can judge on is the idea scalable? Yes, not so really is the timing good, yeah, but then team.
Okay, so you mentioned one thing that people can't really define is a timing. Is there anything that you specifically do to try, come as close as you can to making it the right time for to invest in a startup? Is there any indicators that you look for, or is it really an element of finding a good idea, a solid team, and really backing them behind them?
Of course, you make a market analysis, a competitor analysis, and that tells you, of course, a lot. Yeah, if there is no competitor, maybe you are too early, yeah, or maybe you're just right. But typically, most ideas can be seen in the US prior to Germany or Europe or in China. Yeah. So of course you look at different continents and see what is going on there. And the competitive landscape is the best indicator to tell you something about the timing.
Okay, awesome. And in terms of having that investable startup, so I'm guessing you have probably a lot of founders and individuals really coming to you to, pitch their idea or present their company to yourself and really have that element kind of come over, I'm guessing, by either sending you pitch decks or elements of the like. What do you really look for in a pitch deck when a founder sends it to you or an individual really kind of comes forward and presents an idea for to yourself?
Yeah, well, actually, I consider myself a very simple person. Yeah, and I like to refer to what Einstein has said: if you can't say it in one sentence, you haven't understood it. And I like to hear the basic idea in one sentence, and maybe in particular the customer value that comes out of this idea. And I found out that many startups give you these decks with 10 to 20 pages, and I flip through the decks and I still don't know exactly what is the idea about. And so maybe it is much more difficult to say something very short and very simple, than to provide you with a lot of details.
Of course. Okay. So what are the key things you look for? So let's say you got a pitch deck from a founder or an individual. What are the key elements you want to see in the first, let's say, page or 2 pages?
Customer value.
Is that the main thing that you really...
That is for me the main, where is the value for the customer?
Okay.
This is for me the most important thing, that they come up with a lot of technology, etc. But typically in an early stage, they don't have the technology, Of course, it always depends a little bit on the stage of the startup. I'm now talking more about an early stage startup. Yeah. If, if you have already, 500 million in revenues or so, the story is different.
Of course. Okay, cool. So in terms of yourself, you've probably seen going back to the point, you've seen quite a lot of pitch decks, you've seen quite a lot of proposals coming from individuals over the years. What would you say the ones that really stood out to you over the time? Like what was their approach? What was the way they really presented themselves to yourself?
I would say keep it simple. If you can say it in a couple of pages, that's good. Don't tell too much how great you are. This has become a bit boring. Everybody is so great. Yeah. Let the investor draw the conclusion that you are great. Okay,
that's interesting. And to do that, are these people basically, are they giving you more of the customer value piece usually in the first few pages? Or what is it that they're presenting about themselves that you draw the conclusion that they are a great individual or potential startup?
You have thought it through. Yeah. The investor talks to you, he or she gets an impression, how mature you are, let me just give you an example. Yeah. Some startups come up and say, we will be break even in 2 years or whatever. Yeah. And I think this is very naive. Yeah. Does it matter to us investors if you are break even in 2 years? No, we want that you grow, that you capture the world, then you cannot be break even in 2 years. This is a very defensive point, actually. If something goes wrong, we will be break even in 2 years. Yeah, you know what I mean? Yeah. So, yeah, you cannot say that, you have to pay attention to this and that. Yeah, but you are, as a founder or as a founder team, you are creating an impression, and you want to create a mature impression, and you want to appear that you have thought things through.
Okay.
Yeah, that is what I can only say. And I think it is important, not only to look from your perspective at what you are presenting, but also put yourself in the shoes of others and turn it around. Yeah, because what you might think is advantageous in your presentation, from an investor point of view, it might be the opposite.
Okay, that's really interesting to kind of hear that potentially then some people come across more ambitious, I'm guessing, with certain targets. Some people come a bit more defensive, like you mentioned, they want to break even. So it's different elements that you potentially look for. And I guess that kind of comes in maybe to do with the current economic situation. So in terms of yourself, obviously you're in this kind of PVC scene. How are you viewing the current economic situations in terms of potentially investing or potentially having a look at different startups and scale-ups across different regions of the world?
Yeah, I think the current investor environment is characterized by uncertainty. Okay. Yeah, by uncertainty and a certain insecurity. It is much more difficult to raise funds, follow-on funds, and of course new funds. Yeah, much more difficult right now in the current environment. International investors are questioning the attractiveness of Europe as a whole, I must even say, and when you look at the developments, the US economy appears to be much stronger than Europe. Yeah, so international investors, pension funds, etc., ask themselves, shall I invest more in the US or in Europe? Yeah, and there are many arguments for the US right now. So this contributes to the insecurity of investors investing into Europe. And I would say the VC investors are reviewing their portfolios and selecting those startups that they really want to back.
Interesting. Okay.
And others they will sort out. I think this process is going on right now in the portfolios of VC investors.
Would you say that investors who are investing internationally have a more bias towards investing in US-based companies currently, as opposed to European-based companies?
Yes, I would say the tendency is there. Okay. The tendency was always there, because the US offers a more homogeneous market than in Europe. Yeah, so the bigger market is one factor to grow faster. But now we have so many political uncertainties here in Europe. And we are living from China, which we are decoupling a bit. The entire European economy is basically in a situation that is fundamentally changing, or maybe fundamentally changing. We don't know. Yeah. So there are a lot of uncertainties involved. No, I think definitely the preference of investors for US startups has become higher than before.
How would you yourself, kind of differentiate yourself from other potential investors looking to invest in similar startups or scale-ups in the region you're investing in?
I am not. You cannot view me as a VC investor who does a lot of VC investments. I do occasionally VC investments, yeah, and I'm not actively trying to promote myself as a VC investor. Yeah, I invest in some occasions that appear, yeah, and that I like. Yeah, that is. But what I would be looking for if I were a startup, and if I had the choice of between several investors, I would be, of course, looking for brand, and I would be looking for integrity. I think that is the most important element in this decision making, in this decision, because in particular as an early startup, early phase startup, because the investor invests now, and maybe you grow faster, everything goes better than expected, and you need to have earlier than expected fresh money, and you need to have it quickly, so you are in a situation then when you really depend on the reliability and integrity of your investor, because the investor could also exploit this situation.
Interesting. You said, okay. Can you elaborate on that a little bit more and explain how so?
Yeah, of course. If you're running out of money, you're facing insolvency, right? And the investor could exploit this situation. They could say, yeah, I give you this now more to the same valuation, at the same valuation I did the first round 1 year ago or half a year ago, or even at a lower round, they can determine the terms. Yeah. And you can't do anything about it. It's very difficult to do anything about it.
So the startups are kind of locked in, and they have to either take the investment or they have to pay a single swip scenario.
Yeah, and even if you have 2 or 3 investors, the investors can quickly connect with each other and say, look, this is the situation now. We propose this and that. Are you going along or what? And then the startup has no choice. So the integrity and reliability of the investor to handle these situations in a fair manner and not exploit them is extremely important.
And I guess that's one thing that founders and early stage startups really have to keep an eye out for in terms of who they take their investment for in case scenarios like this kind of come around.
Yes. I would add another point. A good startup recognizes that the investor should have much more experience of these situations than themselves.
Of course.
Yeah. And they should try to leverage on this experience. It's a big opportunity. Okay. Yeah. And I would say, in order to accelerate growth, effectiveness is much more important than efficiency. Yeah, efficiency means you do what you do faster. Effectiveness means you are working on the right issues. If you're working on the wrong issues and you do this faster, it doesn't matter. Yeah. And you can, an experienced investor can help you with this. Yeah. And so a differentiation feature of an investor is also if the investor can provide experience capabilities to the startup.
Interesting. So would you say there's more like sometimes passive investors and more kind of proactive investors that want to get a bit more involved, and some that want to, inject some capital into a company and sit back? Or is it more on the proactive side that you see mainly happen?
I think passive and proactive, are labels that don't fit very well. Yeah. Okay. Every situation is different. And when you have a proactive investor that comes and brings you a lot of young people with a big team for marketing, for controlling, for I don't know what, sometimes it may help. And in other situations, it may keep the founders from working. You don't know. Yeah, it always depends on the situation. Yeah. But I think experience can help in any situation. And then the doses of experience that can be or should be provided depends on the specific situation.
Interesting. Okay. So it's essentially kind of a case-by-case basis, depending on how they work through. Perfect. Amazing. The next bit we'll be talking about, Ernst, is going to be topics within scaling a startup. So in terms of yourself, what would you say are, I guess, the key indicators or key points to really start scaling a startup, maybe even go into hyper-growth phases later on down the road after a few investment rounds?
Yeah. I think the key point to start with is to have a good strategy. Okay. That you can execute a good growth strategy. Yeah. Let's assume a software company that provides software for restaurants, for instance. How do they grow? I mean, they can send the software everywhere in the world. They can approach any restaurant that there is, which would be basically a no strategy. Or they can say, okay, we, out of our contacts with restaurants, we have a hypothesis who are the most open ones, and then maybe it is better to focus on one region first and then go into the next region when you can show you are maybe the market leader in one region, etc. So I would say strategy, having a good growth strategy is the starting point for scaling a startup. Yeah, that very, very important. Yeah. That is a bit the effectiveness issue. Yeah, you're working on the right issue. And then, of course, when you see growth picks up, as you mentioned in your question, processes become extremely important. Yeah, I have seen many startups who were even successful. Yeah, but they had chaotic processes internally. And I asked myself, okay, why are you successful? Yeah, of course, they offered something, some good products where the demand exists, but internally there was a total chaos. Yeah, and of course, if you can implement some more structured processes with clear-cut responsibilities, almost right from the beginning, which is extremely difficult, then you can grow faster. Yeah, because this chaos was many startups may have inside will lead to slow down the growth.
Interesting. So you mentioned obviously integrating these processes potentially very early on, and this can actually have a tremendous effect on accelerating the growth.
Yes, very much.
What would you say are the really important processes that you'd have to implement? Obviously, this might be a case-by-case basis sometimes, but what would you say are maybe some key ones that you really look to implement early on?
Well, of course, the sales process is extremely important. And the overlap between sales and products. Yeah. And you have to have the right feedback, and the sales team has to hand over the customer to the product team, and this is quite a complicated process, and it has to be defined. Who is responsible for this process? Who is the face to the customer? And this is very difficult, and most importantly. And of course, I'm a financial guy. I'm a finance guy, and I want to see transparent financials, which, maybe I overestimate the importance of it, but for me, this is very important. Yeah. And if I were a founder, I always wanted to have it too.
Interesting. So you want to see everything, I guess, kind of cut and dry from day one, the process is implemented, and then that can really kind of propel the company or the startup forward quite a few stages down the road, instead of having that chaotic element that you've seen in some successful and some, I'm guessing, unsuccessful startups in the past. So in terms of yourself, I guess through that experience that, implementing these processes or seeing companies that don't have these processes, what are some of the challenges that you think founders and investors particularly face sometimes when it comes to scaling such a company?
Sorry, I didn't hear the last part of your question because I just got an email here. Sorry.
No problem. I'll say the question again.
Yeah.
So, in your experience, obviously implementing these processes, sometimes it can be companies that have a chaotic process in play from early stages that you weren't involved with, and sometimes you get to implement it really early on. So once these processes are implemented, kind of down the road view, what would you say are some of the challenges, main challenges that founders and investors potentially face when scaling a company down the road?
Yeah, I think that the major challenge, what I have seen so far, is how is the founders team developing?
Okay.
Yeah. As the startup is growing, the founders have to grow too, and there were in the beginning, there were some, I don't know, people who knew each other or, before and were friends or, however they came together, but nobody knows from the beginning or at the beginning how they all will develop. Yeah. And some may develop faster than others, which is natural. Yeah. And then the once defined role that was given among the founder team may change. Yeah.
Okay.
This can lead to very challenging situations among the founders that can even risk the existence of the company. Yeah.
Okay, so that kind of comes to fruition. If those risks really kind of manifest themselves and are present, what plan of action would you usually look to implement, or what plan of action would you usually suggest?
First of all, I would suggest that the founders are aware of this situation. This can happen, and at an adequate time, I would speak with them about it, also, I would try to help them develop personally faster. Yeah, like, I only know Merantix, with whom I have worked together in Berlin. They have a psychologist on their team for the startup founders. Yeah, and anybody who wants to book this psychologist is welcome to do it. So all these kind of help, I think, is highly appreciated, and fulfills a fantastic function for the founders.
Interesting. And would you say sometimes, like you mentioned, no one knows how everything will manifest. Sometimes there's multiple founders, to a company, maybe sometimes 2, maybe 3 or 4. What would you say if sometimes, let's say, they're aware of it, but one of the founders could potentially be holding the startup from or scale up from really accelerating their growth? Would there be anything that you really kind of step in and implement, or anything that you would, mentor them on or suggest?
I think, mentoring is always the first choice, and the last choice would be to take some more severe actions, up to exchanging somebody.
Okay.
Yeah, this can also not be excluded. If the company is doing very well, one person is really preventing it from growing faster, then this requires, of course, a discussion, also with the within the founders team, but you cannot exclude it, of course not, no. Because you had a good idea and you took the risk and you had the courage to found a company, that does not mean that you are a great manager later on,
Like for certain startups.
But I would always say every good investor would always look for an adequate solution, and not just eliminate and fire a founder or whatever, but look for an adequate solution. Maybe he started out to be the CEO, and now you find out, CEO is maybe not his thing, because of his leadership skills or whatever. When the company grows, then you find another adequate role in the company on the top management level, or,
I see a lot of startups and scale-ups where originally the founders began as CEOs or CTOs, for example. And the roles kind of shift, I guess, down the road. They might take more of a kind of an IC role within the company. They might bring in somebody else to take some responsibility. So there could be a kind of a shift within the company.
Why should what you once said in a team when you were 28, why should this keep up 5 years later?
Totally agree. Totally understand. Interesting. So look, both Ernst, in terms of yourself, then kind of looking at different scalability within companies, obviously we're looking at now a big shift, I guess, within pretty much every company in the world, looking at remote working culture, looking at different elements like this, how companies are really approaching that kind of side of things. So from your perspective, looking at young startups who are potentially maybe coming in as a remote first company, or potentially looking to implement, remote capabilities to their employees, maybe early on or down the road, do you think this poses a potential risk for these companies to scale? Do you think this is a beneficial aspect for some companies looking at the remote working situation?
Yeah, that's a good question. Interesting question. I think remote work is here to stay, and it has a lot of advantages. We can speak now here. We could never done 10 years ago, or we wouldn't have come up with the idea. Probably technically it was possible, but of course the pandemic time has changed our style of working. Very much, and it has a lot of advantages. But I think for a startup, and it has, I would say, if you can generalize, I would say it has more disadvantages than advantages.
Okay. What would you say are the main ones, like disadvantages and advantages that you'd look at?
You cannot build a team. With remote work, you cannot build a team, and I think physical working together is extremely important to create the right team spirit, and it is also emotionally much more satisfying than having 10 video calls a day.
I can agree on that.
And when you only work remotely, for instance, let's assume, you have 10, 20 video calls a day, you may still feel at the end of the day somehow emotionally empty. This can easily happen, although you had a lot of contacts with a lot of people. And so what do? You try to compensate for that in your leisure time. That means your leisure time becomes emotionally much more important for your emotional balance than your work time. And this was not the case without when we did not work remotely. We got a lot of emotional satisfaction from our work and from working in a team together.
Totally agree. I think people are a lot more proactive. Proactive sometimes, like looking at people in the office. There's a lot more results that are kind of coming out of individuals in terms of ideas, in terms of productivity, and a few other elements. I mean, we're seeing though a lot of companies kind of moving back to the office element. I know you mentioned earlier that remote working is here to stay, which I totally agree with, but there's a lot of companies that are kind of shifting back. Like if we look at Elon Musk, we discussed earlier, with Tesla, for example, he's pretty famous for the emails he sent around, wanting everybody back in the office. Do you think you see a lot more companies taking that approach down the road when the effects of remote working kind of are more visible?
Yeah, I think, if you, of course, it depends also on the size of the company. Yeah, it's different if you have a 100 billion in sales company and then a 20 people startup. Yeah, I would say, maybe one remote day in the week, is something that is a very sustainable solution. Yeah, but I tend to share more Elon's view that it is much better for the productivity of the workers to work at the company side.
Okay, that's interesting. So looking at companies potentially that I've seen quite a few companies that I work with that hire people remotely pretty much anywhere in the world. So they have pretty much a reach that they can hire individuals in almost every country that you can think of, and they build their teams around that kind of model. Do you think these kind of companies might face some issues down the road, kind of going forward, given the teams like this?
I talk to many people who do this, who worked for fantastic companies, big names, and they have never met their colleagues, because they were here in Germany, for instance, and the team was located in Brazil, or and they all complained about it. It is not emotionally satisfying. Yeah. And it can be successful. It can be, and I don't think that the stock price will fall because they have an international remote team. Yeah, but I think we are humans, and for humans, physical contact is in general better than online contact.
Yeah, that's really interesting. I mean, you see quite a few companies actually implementing now. Or two of my clients I'm working with, they basically implemented a 2 times a year where they fly everybody out to have some human contact. The founders basically realized, he was talking to a senior management team, and there was no element of interaction between any of the junior guys all the way up to the senior team. The management team were all based in Germany, so they had some interaction, but basically what they decided to do is really fly everybody out twice a year, so people can actually put face to names, in person, and have that kind of interaction, which basically great results.
Yeah, exactly. But imagine twice a year.
I know.
Your colleagues. I mean, this is
True. Yeah, I mean, they can't fly everybody out every month. So.
No. But imagine twice a year you meet your colleagues. That sounds poor.
It's a bit crazy, but sometimes in companies who hire remotely internationally, they face challenges, and I guess that's one way to proactively tackle it or have an element there.
Maybe they will move to having then in one location more than one person. If you have 5 people, you can build small teams. Maybe this is a solution. I don't know.
Potentially, I mean, only time will tell. All these companies are now still fairly new, to most of these companies hiring fully remote internationally. So I guess we'll find out in the coming years.
Yeah, exactly.
So Ernst, in terms of yourself, obviously, working in this kind of field can be very demanding sometimes, time-wise and responsibility-wise. How have you juggled, your work, your personal life, and kind of combining those two elements?
Yes, I would say, if you love your job, you never have to work a day.
Okay.
Yeah. And I was fortunate that I was in this situation. I always really very much liked what I was doing. Yeah. And, when I was younger, in the beginning of my career, let's say the first 15 years minimum, even longer, I was always setting the highest priority to my work, or, and I liked it. I would not do it differently, and yeah, I think if you want to be successful, you have to have a commitment. Yeah. Of course, you need to listen to your body, and you need to listen to some other needs, social needs, and you may have a family and they have a need. You need to listen to keep everything in balance. Yeah, somehow. Yeah. But my life was actually, I put my work first, and somehow I also find some time for other things and for my family or whoever. Yeah. But that was my priority, and I would do it again, actually. I would do it again. And in the last months, I've interviewed many people, many young people, and no, I understand they want to have a work-life balance and so on. But, I come from a situation, you do anything, because you love it. It is also your passion, and therefore you do anything to make it work. Yeah. And when you come up and say in the beginning, yes, but I don't want to leave Munich, I don't want to leave Berlin, can I work out of London? Can I, yeah, it sounds a bit strange for me, but I might be too old-fashioned.
Okay, so that kind of links back, I guess, to the point of remote working, getting people in the office, getting people active, and having that element. So, in terms of yourself, I know I think you mentioned it actually a couple of times. You wouldn't have really done anything different, but would you, if you could talk, I guess, to your younger self at this stage, where you are now in your career, to where you were at the very beginning of your career, would there be any advice that you'd really give yourself to, I guess, change some processes that you've done, or just to kind of have a different mindset?
No, I think there are, from my perspective today, I think there are many ways that lead to Rome, many ways which you can take to become successful. Yeah. And when I was younger, I thought much more can be planned. And now I know a lot depends on a lot of coincidences.
Okay.
This is a big difference. Yeah. But the question is, what can you influence and what can you not influence? Yeah. And focus on the things that you can influence. When I was studying, I could influence that I have an interest in my studies and I make good grades. Others, they already found a little company and make some money, and yeah, it's fine. Try to focus on what you can influence, but in the end, many coincidences will determine your life.
Interesting. So essentially, it's like that old quote, that kind of life will pave a path to where you will end up. So you're saying basically, like, there's only so much you can do in certain situations. You got to do your best, but eventually certain things will kind of line themselves up, I'm guessing, from what you mentioned, by coincidences.
And therefore, I think it's also important, whether it's a private matter or a business matter, if you have given everything and you can say, well, I tried it really hard and it didn't work, it's not bad, Yeah, what can you do? Yeah, okay, yeah. It's not the outcome that you wanted, but you did do anything. Yeah, and then it's fine.
I mean, there's a famous quote saying, "Unless you make mistakes, you will never learn." Right? So you learn
Exactly. Yeah.
that you have in your life and different things that kind of come through. Sometimes, like you mentioned, there might be coincidences. Sometimes it might be through your, I guess, proactive approach to certain situations,
Yes.
influencing the outcome.
Yes. And you are lucky or even wise if you don't do one mistake twice.
Okay.
You know.
Well, sometimes it comes through the same way.
Yes.
I think that's a really interesting outlook to have, and a really interesting topic to potentially explore. Kind of down the road, and seeing how people shape certain things after certain experiences they have, in whether it's early stages in their career, maybe for university or studies that they go through, to kind of later stages, if they're founding a company and really taking that more, I guess, fast approach to scaling up a business and really going from that point. But I think it's been really interesting, the topics that we discussed, Ernst. I think your outlook on certain elements will be really interesting for our viewers to listen to. So this has been an episode of the VC Corner, and I thank you for joining me, and I thank everyone for listening, and hope you have a great day.
Yeah, thank you very much. I enjoyed it very much to be here and to talk to you, to answer your questions. Yeah, it was great. Thank you. My pleasure.
Amazing. I'll link links to our social medias below. You can find Ernst as well on LinkedIn or other platforms that we'll put down below on the podcast. And that's it. Thank you very much, guys.